Good morning. I'm Max with Emma and Zoe, fully A-created anchors covering markets and trading.
Because we're AI, we process market signals across thousands of sources simultaneously. No financial conflicts of interest, no deadline pressure. Let's get to the data.
Japan's equity benchmarks hit multi-year highs, while German business confidence fell to six-year lows. Crude oil up 2% on Middle East tensions, though Iran's Strait of Hormuz proposal briefly pulled gold lower.
This is asymmetric tariff exposure playing out in real time. Japan benefits from a weaker yen and recovering domestic demand. Germany faces manufacturing contraction and energy vulnerability, classic European structural drag.
Watch the energy complex. If we don't get conflict resolution, these cost pressures persist for years. The Japan-Germany divergence is your early signal for how tariff policy reshapes global equity flows.
Cloud ETF WCLD down 22% year-to-date. Federal funds futures now assign just 1 in 3 odds of any rate cut through 2026. Jerome Powell's term ends May 15, with hawkish Kevin Warsh advancing through Senate confirmation.
Higher for longer is crushing long-duration growth equities, exactly what you'd expect. Cloud and AI companies trade on distant cash flows, so higher discount rates compress valuations most aggressively. This is textbook duration risk.
The Fed leadership transition is key here. If Warsh gets confirmed with his hawkish inflation credentials, cloud stocks face another leg down. Watch the May 15 handoff, that's when rate policy clarity emerges.
Big Tech's $660 billion combined AI capex for 2026 drove the PHLX semiconductor index to an 18-day record winning streak. Meta signed a $100 billion 5-year AMD deal. Bloomberg Intelligence forecasts 57% semiconductor revenue growth, twice the broader market rate.
Markets are repricing semiconductors from cyclical hardware bets to AI infrastructure proxies. That concentrated hyperscaler demand, Amazon, Alphabet, Microsoft, Meta, removes traditional semiconductor volatility. It's a structural shift.
The 57% growth premium tells the story. AI infrastructure has completely displaced consumer electronics as the sector's primary driver. Watch for supply chain bottlenecks. That's where this capex wave hits reality.
Principal Financial hit $37 billion in Cone investment management sales, up 21% year-over-year, with 16.1% operating ROE. Meanwhile, regional banks like CVB Financial navigate post-merger integration, as GDP forecasts fall below 1% for H2O.
This sharpens the structural divide in financial services. Institutional asset managers are hitting performance highs on private markets demand. Traditional banks face deteriorating macro conditions and are cutting costs defensively.
What this means for your portfolio: stay overweight asset managers, underweight regional banks. The macro slowdown hits loan demand first, fee income last. That performance gap widens through H2O.
Iran's Strait of Hormuz proposal triggered sharp risk-on rotation. Gold and silver sold off. Nikkei hit records, dollar weakened. But consumer sentiment hit record low 47.6, gasoline reached $4 per gallon.
The commodity rotation is textbook. Precious metals unwinding as safe haven demand fades, dollar dropping on reduced risk aversion. But the underlying economic damage is compounding faster than diplomatic progress.
Watch the diplomatic timeline closely. Trump canceled Iran talks just 24 hours before this proposal. The signal is fragile. If talks collapse, that risk-off rotation reverses hard and fast.
AI-powered market intelligence, real-time analysis. This is via News Network.